Skyharbour is a high-grade uranium exploration and development company with 6 drill-ready projects in the Athabasca Basin in northern Saskatchewan. This is one of the top mining jurisdictions in the world, ranked number 3 by the Fraser Institute. It's also the highest-grade depository of uranium in the world. Some of the highest-grade mines owned and operated by companies like Cameco. So we're in the basin. We've been in there now for about 6.5 years. We've taken the opportunity over the last 6.5 years to acquire these projects at attractive valuations. There's been a somewhat depressed uranium market, and we've been opportunistic in building up this portfolio. We have a dual-pronged strategy. So first and foremost, we're out there looking for the next big high-grade deposit in the Athabasca Basin at our flagship Moore project. We're currently drilling there, 2,500-meter winter program underway. We're testing a new geological setting, the basement rocks, where most of the recent high-grade discoveries like NextGen, like Fission, like the Griffin deposit, Denison's Wheeler project, these are all basement-hosted deposits. So we're now looking at the basement rocks at our flagship project. So we offer that high-grade discovery potential that's yielded significant returns for investors with other companies over the last number of years in the Athabasca Basin. And then secondly, we do act as a prospect generator. As I mentioned, big property package scattered throughout the Athabasca Basin, about 250,000 hectares, and we can only focus our time, money, and efforts at our main project. So what we do is we look to bring in partner companies, act as a project or prospect generator. We've consummated 2 deals, one with France's largest uranium mining and nuclear company called Orano. They're spending upwards of $88 million to earn up to 70% of one of our projects. They're going to be exploring that Preston project of ours coming up in the next few weeks. And then we have another company called Azincourt, similar deal where they can earn 70% of the project. They have to spend just under $4 million total. That includes both exploration expenditures and cash payments. And they're carrying out a 2,500-meter drill program as we speak as well. So in addition to our 2,500 meters, you have partner companies that are funding exploration. We get some cash payments as well, which helps keep the dilution down. So a solid strategy. The management team and technical team, I run the company, started it 7 years ago with my head geologist, Rick Kazmersky, who's a 40-year veteran in the Athabasca Basin. He's found a lot of uranium in his day. He was the exploration manager at Cameco. And him and his team are based in Saskatoon. And we also have our largest strategic shareholder is Denison Mines, listed on the TSX in New York Stock Exchange. David Cates, who's the president and CEO, he's on our board of directors as well. We have a close working relationship and strategic partnership with Denison. And we have a handful of other directors and advisors that bring both capital market experience and technical expertise, focused expertise in the Athabasca Basin in high-grade uranium exploration, which is exactly what we're setting out to do here. So I think a couple of key points here. Upcoming near-term catalysts. This is a big one. We are actively drilling. We're one of a few remaining active uranium exploration companies. We're drilling in the Athabasca Basin, so you have the potential for very high-grade discoveries. In our case, additional discoveries to be made. We've seen in recent years the kind of returns generated from these high-grade discoveries. So even in a depressed uranium market, you don't need a booming uranium price to see these kinds of returns generated. You can drill 1-2 good drill holes at a $10 to $12 million valuation, and you can see significant share price appreciation. So as I mentioned, 2 drill programs currently underway. Our other partner, Orano, is going to be starting up a big geophysical field program shortly. So 3 programs that'll be underway simultaneously in the coming weeks. 5,000 meters of drilling. A bulk of that, the funding coming from partner companies. So multiple irons in the fire, lots of news flow and upcoming catalysts as a result. But the second big one is the uranium market. As we know, it's been under pressure since Fukushima, since 2011. It's a contrarian bet right now, but I think we're at that inflection point. We saw a bottom put in 2016. We have seen it move up slightly since then, now trading at the commodity trading at $25, just under $25 a pound. But there's a significant supply deficit, primary mine supply deficit that's formed, major production cuts over the last several years, supply side response that's playing out in response to this low price environment. We're starting to see that work its way into the market, which should be supportive of prices. A couple of big things to look out for in the next year here is Cameco, having shut down McArthur River, has to acquire up to 22 million pounds of material this year, and a good chunk of that's likely going to have to be bought out of the spot market, so that will be supportive of prices. And last but not least, we've also seen some resolution to the uncertainty that was created over the last couple of years around this Section 232 investigation and subsequent nuclear fuel working group. We just saw a budget proposal of $150 million a year for a uranium fund in the U.S. Clearing the air on this with this uncertainty is a big thing to bring utility companies back into the market. We've seen the largest buyer of uranium being U.S. nuclear utilities more or less sidelined for the last little while. And now that we're seeing some resolution, we can see these buyers come back to the market. We know that they have to come back. We know that a lot of their existing contracts roll off over the next several years. So this new utility contracting cycle will also drive higher prices going forward. Definitely the drilling that we have underway right now. At our flagship project, Moore Lake, we spent the last 8 months carrying out some new geophysical surveys that use drones. This has given us better imaging, a better idea of what's at depth in the underlying basement rocks. It's important to note that the source of the high-grade mineralization, we've had drill intercepts as high as 21% U3O8 over 1.5 meters, but it's in the sandstone. It's above the unconformity or at the unconformity. The underlying basement rock is where the feeder zones are, where the structures that potentially host some of the higher grade mineralized zones are. And we've done a lot of work in the last 6 to 8 months properly refining these basement hosted targets. So now with this drill program, we're going to be testing those. I think we have a good shot at finding more at depth. And then, as I mentioned, partner funded programs as well that can generate news flow. And then, like I said, also look out for a rising uranium price. I think that could be the sleeper pick this year for the metal space. I think there's enough near-term catalysts on the near-term horizon for this metal price to move significantly. You got to remember, at $25 a pound, very few mines are making money, and the long-term forecast price for this commodity, with most analysts that cover it, is between $50 to $60. At $25, you're well below the average global cost of production. We're now seeing the supply dwindle. We're seeing secondary supplies and inventories drawn down. That can only last for so long. And I think also on the demand side, look, we have continued demand growth in places like China, in India. This is the only source of clean, baseload, reliable, affordable electricity. When you see all these climate change protests like we've seen in the last 6 to 7 months, that's only going to be positive for nuclear going forward. And we're starting to see the likes of Bill Gates and well-known environmentalists like Michael Schellenberger that are pro-nuclear, that are out there talking up nuclear. And I think that the positive sentiment as a result for nuclear, I think that's going to add to the demand growth going forward. And you couple that with new advanced nuclear technologies like SMRs, small modular reactors. This could be the new wave of nuclear reactors, especially in the Western world going forward. So positive, very, very compelling and positive fundamentals for this metal and this commodity going forward. And as we've seen in the past, when the price of the commodity moves, it moves very quickly. We saw that in 2006, 2007. I think we're coming into that next bull market for this metal.